Thanks again, Steve, for the opportunity to do so. We did this talk in London a couple of weeks ago. It seemed to be well received, so hopefully you guys will enjoy what we're talking about today. There's still 30 minutes up on the clock there, by the way, so don't give me too much time here, guys. So I live in Singapore. I came back into Australia after a long period. You guys have been really locked down. It was super great to be back. I walked into Melbourne Airport, and as I was walking to catch my connecting flight to Sydney, my son said, "What's digital transformation?" And I thought, that's a strange thing for a 13-year-old to ask out of the blue. So I said, "What are you talking about?" And he pointed to this billboard that was up there from Deloitte's. And Deloitte said something like, we're the go-to guys for digital transformation. And so I told him, I said, look, you remember when we came into Australia just now, we had to fill out a form with pencil and paper. Only one person is going to read that form, and then it's going to be stuck in a box somewhere in Parramatta for the rest of its days. Whereas if they'd done that on a web app like they do in Singapore, then anyone can look at it. Anyone in government can look at it. They can do all sorts of analysis about what kinds of tourists are coming into Singapore. You get so much more value when you digitize something as opposed to the non-digital form of it. And my 13-year-old said, "Dad, isn't that what you do for venture capital?" I said, "Very good, son." So that's my introduction here. We are digitizing venture capital, and that's part of what we're talking about when we talk about moving to Venture 3.0. So I imagine quite a few of you guys are investors. Some of you probably have your own family offices. Family offices and angel investors are playing an increasingly massive role in venture. A lot of times, just like some of the great presentations we just saw, people now will come to conferences like this and raise money. Why? Because it's generally less complex. The capital is generally more patient. And so family offices are getting a much bigger bite of the venture capital pie these days. And you can see it on here. This last bar here is half a year in 2021, and that's during COVID. So this is on an exponential path up. We're going to see a lot more investing from family offices and from angels as part of venture. Yeah, there is a problem with this, though, and that is that it's going to get increasingly hard to compete in a world where there's a lot of capital coming to it and a lot of technology. And we're going to talk a bit about that because this is really what Venture 3.0 is about. Because Venture 3.0 is going to change everything with respect to how people present their investment, how the investment gets analyzed, the time frame the investment gets done in, and pretty much everything about the way that people raise capital and people invest. But before we talk about 3.0, let's talk about Venture 1.0. This is the classic sort of movie version of venture capital. This is Silicon Valley. By the way, this picture is the first ever venture capital deal. This is ARDC investing in Digital Equipment Corp back when computer screens were round, as you can see in the middle here. And this deal probably took them a year to put together, God knows. And this was really the paradigm for the first 30 years of venture. Venture 1.0 was a boys' club based out of Silicon Valley that invested in proprietary deals and not many of them. This is what we think about when we think of venture today. It's a room full of folks. It's very much like this. It's a vibey environment with lots of people gathered around investing in young startups, people just out of university. Very, very collegiate sort of atmosphere where we all work together, we share deals, we share analysis, we share due diligence, and everyone's investing. Family offices, VCs, angels, everyone's in the group together. And it's a lot more efficient than it used to be. It takes less time to do a deal. And in some ways, you can kind of think of this as the golden age of venture capital because everything's kind of just perfect. We're all getting to have a look at a deal. We're all investing together. It's terrific. What could go wrong? Here's what could go wrong. So many of us would recall the 90s. At the very start of the 90s, you could go to your stockbroker and you could say, I want 20 shares or 200 shares or whatever the lot size was of Telstra. And they'd call you back in the afternoon, they'd process it. And by the end of the 90s, you had Goldman Sachs with tens of billions of dollars in dark pools, and the money was being invested and returned in a very, very different way, just in a 10-year period. We can see those same dynamics happening now in venture capital, and that's what I want to talk about and focus on today. Because if you're not aware of these dynamics, you will get bulldozed, you will get run over. because the kind of stuff that's happening right now is JP Morgan is lending Tiger Global $5 billion to invest in venture. Goldman Sachs and Sequoia are opening up open-ended funds where there's just limitless amounts of capital flooding in. So how do you compete as an investor, as a family office? How do you get your hands on those deals when people are starting to use massive amounts of technology, AI, and all sorts of things to really transform venture, I would argue, as much as Goldman Sachs transformed public securities trading in the 90s. So what we're going to focus on here is the movement between these two worlds of Venture 2.0 and Venture 3.0, and then we're going to talk about how we can compete and what kind of tools are available. So let's look at 2.0. So 2.0 can be summed up really as gut feel. You get a deal, you've got some time to look at it, you think about it, you talk about it with your spouse, you talk about it with your friends, but everything's very manual, it's very collegiate. You call up your other VC friends or your other angel friends and you talk with them about the deal. Everything's kind of local. There's this expression in America that you've probably heard of called TMZ, which stands for 30-mile zone. That's really the best description I can think of the way that American VCs have historically invested. They don't get on planes, they invest within 30 miles of their office, and nowhere is that more true than Silicon Valley. Everything they do is manual, all the DD is manual. There's a team of analysts sitting in their front office that are looking at the deals on the way in, and there's some special problems with that we'll talk about as well. Impact and ESG, who cares, is the 2.0 model. Nice to have. Yeah, there's some impact conferences out there. I'm not going to go to them. This was the thinking until quite recently. Co-investment rights and annual reports were really the norm for LPs in those funds. The LPs were very much passive, silent investors in these groups. Okay, let's roll to 3.0. 3.0 is a completely different paradigm for venture. Everything that used to be slow is fast. Everything that used to be manual is now automated. Things that used to be collegiate are now very competitive. And you've got people like Tiger that are flying into a city and scooping up the top 3, top 5 deals that they can in a particular sector without letting anyone else know that they're in town. Now, that's very, very competitive relative to what used to happen. They'd take 20% of the round, they'd give the other 80% to someone else. It's not happening anymore. They're taking the whole thing. And they're maybe investing at seed and taking every dollar available through to IPO. It's a very, very different strategy than what we've seen before. You're seeing a lot more use of AI and technology. As Hatcher Plus, we're one of the leading developers of AI and process automation technologies. We're going to talk a bit more about that in a second. But we see firsthand what all the other guys are doing, and it's really fascinating. And if you don't have access to AI and process automation, it's going to be very, very difficult to compete. Stage agnostic, what does that mean? It means that I don't care if it's seed stage or Series B or formation stage or Series C or pre-IPO. I'm going to go in and I'm going to invest. And it used to be that someone would come up to you at a party and say, hi, I'm a Series A investor. We don't think that's going to happen anymore or happen anywhere near as often. People will come up, they'll just be a venture investor, and they'll probably be investing seed through IPO. They'll be taking every dollar they can. In terms of real-time reporting and co-GP rights, what we're seeing now is exactly that. We're seeing people coming in saying, we want to get the right to invest beside you, not after you've invested. We want to be able to co-invest with you so we can put money to work. Our system that we've built, our VAR system at Hatcher, you can output a real-time nav on that any time of the day, anytime you want to, just by pushing a button. That's a lot different than what happens currently when you get your 6-monthly or 12-monthly report. So what does this all mean? Right now, I would say there's a handful of people that are using AI and process automation. There's some excellent systems out there. EQT in Germany springs to mind, the system I've talked about, and we'll be talking about it in a second at Hatcher. Also, some of the big guys have invested a lot in tech, and some of that's pretty good. But that's nothing compared to what Gartner is saying things are going to be like. They're saying that by 2025, 75% of VCs and investors will be using AI and process automation. So think back to that chart that we just had a second ago of the slow versus fast. If you're trying to compete and you're trying to get in on a deal and the other guys are using AI as part of their decision matrix, good luck. it's going to be very, very hard to get in on those deals if someone else is doing their competitive analysis in 10 seconds and you need 10 days. So this should be self-evident. If you want to compete in 2025 or even today, you need to get your own capabilities. You need to be plugging in your own AI, your own process automation. You need to have a system. And that's what I'm here to talk about today, which is the system that we've built. VAST stands for Venture as a Service Technology Platform. That name was gifted to me in Hong Kong at a meeting when I told someone that we had a Venture as a Service Technology Platform, and he said, "You should call it VAST." And I said, "Why?" And he said, "Venture as a Service Technology." I went, "That's very good." So that's how we ended up with the name. So VAST is what happens during a pandemic, as it turns out. In fact, if you take fund managers, data scientists, process automation experts, a bunch of coders, a bunch of legal tech guys, and you put them in a room with $12 million, you end up with a pretty nice-looking system. We went down this road, or we dug in really hard behind the development of our technology during the pandemic because we had nothing else to do. A lot of the accelerators that we typically were investing with around the world shut down because they were physical locations and people could no longer show up there. So we decided to really double down on our tech. And that's how we ended up with an award-winning investment management platform. When we say award-winning, there were 476 fintechs that presented at the UBS Future of Finance conference last year. We were in the winner's circle. There were 3 that were selected for future development by UBS, and we were one of the 3. We were the second-placed guys. So this is what VAST looks like when you plug it in. It's white-labeled. It's available in any language. It's available for your family office. My version of this sits at sharp.hatcher.com, and that's what you're seeing here. This is my family office, and I've digitally transformed my ability to manage my own investments, to look at deals, to do analysis in 15 minutes. That's how long it takes to sign up with us and get a customized version of this platform. The platform, as you'll hear, is free. And we'll talk about why that's free in a little while. But as you can see on the right-hand side here, this is very interesting. This correlates to what we see Venture 3.0 becoming. Venture 3.0 is going to be very fast. It is going to be very competitive. You are going to need a massive database. By the way, since we put this PowerPoint slide together, we've now got 1 million deals in our database. What that means is we've probably got every deal in there from the last 20 years. So when you dial into our database, you can do some fantastic competitive analysis, and I'll show you how that looks in just a second. So we're investors, and we built this system because we're investors, and we wanted to manage with something better than Excel. Almost everyone in this room who is an investor, I guarantee you're using Excel. I can see a couple of smiling faces around the room. You've probably spent years developing those things. Terrific, great. I was you. I had Excel stuff that seemed to work. And then after $12 million of investment, we have a much better system, and Excel is banned from our organization. You can download stuff in Excel, but we don't use it for any serious work in here. So the 3 funds I'll mention here, it's about 10 that sit on the platform that we have some relationship with in a co-GP sense. Our first fund is a early-stage venture fund. Our second one is a very early-stage venture fund. And our third fund is a $250 million carbon fund. And all these have dry powder and cash ready to invest at the moment. So we've solved that problem. We have capital. But the second problem really is the perennial problem that every investor has. And that is, how do we scale up while keeping the costs down? So we provide a solution to that. With VAST, you can actually create a brand new fund in 5 minutes. And I was sitting at dinner the other night with a family office in Singapore, and the guy said, "I'm calling BS on that." So we pulled out our laptops and we set him up a fund in 5 minutes. It's a variable capital fund in Singapore, and we're extending this into Australia to manage investment trusts. We've just set up in Abu Dhabi. We'll be setting up on ADGM in Liechtenstein and Luxembourg. I was just in those places 2 weeks ago before coming to see Steve in London. So you'll be able to set up a fund in several of the main and most popular jurisdictions in 5 minutes. It normally takes 12 months if any of you have not set up funds and you're wondering. The lawyers, the regulators, everyone wants a piece of your time. And so what we do is we externalize a lot of that functionality and we get you up and running very quickly. One of the biggest problems as an investor is deal flow. And the worst thing that can happen when you're a family office is when you get a really amazing deal through the door. And tell me if you've seen this happen, but you'll get rubbish, and suddenly something lands on your desk and it's amazing. Everything about this deal is incredible. You can't believe your luck. And then the self-doubt starts to kick in. It's like, wait, why did I get to see this deal? Why am I getting to look at this amazing opportunity? There must be something wrong with it. What our system allows you to do, as you'll see in a minute, is do analysis on that deal, figure out where it fits in the ecosystem of the million deals that are in our database, and within 15 minutes, you can have the kind of competitive analysis sitting in front of you that normally takes a team of analysts days to produce. You can use AI to grow your portfolio. What does that mean? You can create a strategy, and you can use AI to inform that strategy and to pick deals for you. And then, of course, you're going to do the human thing and go through those deals yourself, but this is a huge help for you. Finally, you can automate your back office. Back office is the thing that takes the time. I met a lady in Monaco recently, and she spends 3 weeks every quarter doing reports for her 80 family members. So what we're able to do is give her a button that she can push and do those same reports in literally 8 minutes. It all self-compiles. It's right now. It's the nav of right now, and she can send that out to all of her family members. I was presenting this in Saudi Arabia recently. The guy I was presenting it to threw up his hands and he went, wow. He said, this is amazing. This is like a GP in a box. And I said, that's a good T-shirt. I'm going to steal that line. All right, so let's look at Fund Builder. So as I mentioned earlier, you can build a fund in 5 minutes. Why does Singapore make sense? Because Singapore is a Cayman killer. Singapore has tax treaties with most of the rest of the known world. It's a AAA jurisdiction. It's a very clean place to run financial businesses out of, probably the cleanest place on the planet. And if you have a fund set up, it's a regulated entity, so there's no more KYC that's required on you. All you need is a comfort letter from your fund manager, and you can get on with doing a deal. It's a really efficient, great way to set yourself up to invest. This is a fund that we just set up, actually 3 funds that we set up for a Dubai family office recently. We set these 3 funds up. We saved them over $1 million in annual costs, and we saved them about 75% on the setup costs. The setup costs and the annual costs start from around $25,000 to set up a fund, and roughly $25,000 to $75,000 a year to administer the fund. We try and keep the costs really low to stay competitive. Deal Scout. What is Deal Scout? Well, first of all, I should step back there for a second. Deal Scout is a way of organizing your deals. I met a guy in Singapore the other day. I said, how's things going with your angel investing? He said, I think it's going well. I said, you think it's going well? He said, I don't know anything about what's going on with my angel portfolio. He said, no one ever tells me anything. I don't know how to contact these guys really in any organized way. So he could not give me a number on how well his angel portfolio was doing. And I showed him what we're doing with Deal Scout and with Vast. He's like, okay, this makes sense. Now, he's got 75 investments that he's made. It's insane not to be using a system like this, particularly when it's free, to manage your investments. So what is Deal Scout? Deal Scout gives you access to 1 million deals in our database, and there's thousands of deals that come in every month. So a bit like Steve's CRISP system, you can log in and you can find deals. Now, the difference between us and Steve is that we're seeing a lot of stuff, and we're using our AI to analyze it, and it's global. What Steve's doing is a much more minutely detailed DD among a lot of other people that are providing feedback. So they're quite different systems, but this is a useful system for organizing your deal flow. You can create a competitive matrix in minutes, and you don't have to pay any fees on founder intros via the system. So it's quite a popular way of doing it. Apologize for the small font here, just to illustrate that I was in a session the other day in Abu Dhabi, and someone said, okay, so this sounds really good. How does it work? And I said, well, look, we use natural language processing. You just basically give it a brief in language, in English language, and we will take that and use AI to interpret it, and then we'll find all the deals in that space. So what you're seeing here is us saying, here's a definition of indoor farming. we want to find all the indoor farming opportunities in the United Arab Emirates, push a button. This brings up everything that is in the United Arab Emirates in indoor farming and a ranked list of how well it matched your brief. This is really good. So if you're seeing a small amount of deal flow, you can take whatever they're saying about their deal, you can enter it into this system, and you can immediately find all the competitors to that deal, which is, of course, the first thing that we all want to know when we get an opportunity put in front of us. Our back office. So this is a picture of our first fund. It's doing great, 26% IRR. How do I know that? Because I can log in and I can see exactly what the real-time numbers are on this fund. How did I used to have to do that? I'd have to log in. I'd have to pull up my Excel. I'd have to reconfigure everything, look at today's date, run the calculations, hope that they're correct and no one's changed any of the formulas. This is a much more efficient way of running your portfolio. You can create reports in real time. It's totally self-service, on-demand fund admin. What does that mean? It means you can plug us in as a fund administrator. We'll charge you $25,000 to $50,000 a year to do that function, or you can do it completely self-service using our system, and we don't charge for that. You can manage an unlimited number of portfolios, and people do. It's multi-language and it's multi-currency. That matters less in Australia, where we're from, but if you're sitting in Turkey and only the top people speak English and you want your support staff to be able to look at everything in Turkish or Chinese or Japanese or Korean or German, you can. So we price this at, the Deal Scout pricing is around $10,000 US a year. Pretty reasonable. There are other people out there charging $15,000, $20,000 that have a half or a quarter the number of deals in their database. You can sign up for that and you can enjoy that deal flow for the entire year and share it with your other family members. The fund builder, we charge $25,000 to set up a fund, and then it's roughly 0.1 to 1% of AUM, depending on how much you need us to do. But again, what we're trying to do here is be very competitive and keep the costs low. Because if we can change your cost base from $750,000 a year to $125,000, like we recently did for a Singapore fund, that's transformative. That's $600,000 that you can put in your pocket. So you can still charge the fund 2%, and you can outsource all the grunt work to us. So that's what we're doing with our back office here. That sums it up better than anything else. Now, by the way, you can use this entire system for free. The only things we charge for is if you want to put a fund on our platform and you want us to do the legals and produce everything, which again only takes 5 minutes, we'll charge for that. We'll charge for the deal flow. But if it's your own deal flow, if it's your own back office, we don't charge for any of that, and you can white label it and just use it. And we're happy for you to do that. So finally, this is the old model versus the new model. I'm not going to go through the long list again, but I'd say the old model is very simply trust us and gut feel. And the new model is very much AI, data, blockchain, all of the modern things that you need to basically compete, starting now, but especially starting in 2025. So we're Hatcher Plus, we're at hatcher.com. There's more about our story there. There's a lot of useful blogs that you might find interesting on the site as well. So please, by all means, go to the site or contact me after this. Just come up and see me. I'll be standing outside somewhere with Steve. I'm going to sign off now. I'm going to leave you with our punchline. The future is vast. And I'm just going to mention once again what Steve mentioned, and that is that we've put together a 10 million Aussie fund to invest in local startups here at an early stage. The idea is that we provide them with the seed capital, even pre-seed capital, and then they'll come to a show like this and they'll present to you guys and you'll get a chance to invest in them. So we're going to invest at the riskiest stage in build a very diversified portfolio. If you'd be interested to put money in the fund, please talk to either Steve or myself. We've just started investing with StartMate, which is Australia's leading accelerator. They feed into Blackbird as a VC, fabulous bunch of guys. And we're very pleased to be doing that. So our first investments are already going out the door into StartMate-backed cohorts. So I've got 5 minutes left. We use this for a pretty useful Q&A session in London. Happy to answer any questions that you might have around how we see venture evolving and how our technology can maybe help.